Do you want to triple or quadruple the returns on your investment? With my research project, you can do just this. My research project analyzes one of the only remaining industries that financial analysts and companies have spent little time understanding, the social media industry. My research aims to understand this industry and the ways we can value companies in the industry. That means that you have the opportunity to capitalize on investments for several other individuals or companies. Before I go into the details, however, let's take a step back and let me show you how big this research actually is. So Snapchat, a social media company, is planning an IPO that is currently valued at $25 billion. Now, if those numbers aren't enough to make your head spin, let me give you one more. Snapchat's growth rate is 13.5% in the coming year, higher than any of its other competitors. That means it has an enormous amount of financial power, and by properly investing in it, you can capitalize on that. Determining how to properly invest in Snapchat, though, means we have to find a way for pricing or valuing similar companies. There are two ways for doing this, the comparable firms approach and intrinsic valuation. My study uses the comparable firms approach because intrinsic methods rely on projective models and statistics that just break down in firms like Snapchat. Essentially, these companies gain value based on the discoveries they make, not the income they bring in, and because they invest heavily in research and development practices, they often have a lot of debt. My study aims at using comparable firm multiples to be able to determine which multiple is best at valuing firms like Snapchat, something which has never been attempted before. Comparable firm multiples are financial ratios in the comparable firms approach based off two financial variables, which are used to compare the efficiency of different companies. For example, this is price and this is earnings per share. Together, they make the price to earnings multiple, and if one company had a higher price to earnings multiple than another, it would have a higher value than the other company. This means that you can also be the first to capitalize on my research by investing using the multiple I find as most effective. Because Snapchat's IPO is not yet out, to find out how to value Snapchat, we're going to have to look at similar firms. These are Yelp, Facebook, LinkedIn, Twitter, and Tencent Holdings, another huge social media company in China. We got these by cross-referencing two different financial indexes, the Selective Social Media Index and the Selective Social Networks Index. Cross-referencing the two indexes ensures the companies we analyze are both in the social media industry and connect people across their platforms, something that Snapchat does. Analyzing the firms tells us how to analyze Snapchat because the firms are so similar in the corporate and market strategy. Finally, I need to tell you how this is actually going to get done. Since comparable firms' multiples are proportional to certain financial variables, we can estimate the variables using a projective estimate of the multiples. Let's take a look at price to earnings. We can estimate the actual price by multiplying the price to earnings multiple by earnings per share and adding on an error term. If this seems a bit circular to you, let me clear it up. Essentially, the multiple we use is an estimate based on the mean or median value of multiples closest to the firms we are analyzing, using metrics such as total assets held. Then the multiplication gives you an estimated price, and the error term is however much we over or underestimated. When summed together, these yield the actual price. Calculating average differences in the error over multiple tiles of different variables, we can find the best multiple for analyzing these firms. So invest in my research to make sure you actually get your money's worth back. In my research, you and the everyday man will see results.